Coming right up, we have a panel discussion on how COVID affected startups' fundraising and growth. Join us now as Mohamad Sabouneh, FinTech Accelerator Director from Rainmaking, moderates this enriching session across our esteemed panel of CEOs.
Hello, everyone, and thank you for joining us for this panel. My name is Mohamad Sabouneh. I'm the Managing Director for the FinTech Accelerator program in Dubai by Startupbootcamp. I'm very honored to have with me here on the panel Neel from DataCultr, Kevin from Hubpay, and Mukesh from Paymatrix. So the panel is titled How COVID Affected the Startups' Growth and Fundraising Efforts this past year. So during the conversation, this discussion, we're gonna listen to our esteemed panelists' perspective and opinion on what happened this year. So to kickstart things, maybe we can just have a round of introductions. If you can just tell us what you guys are doing, what's your startup, which stage you're at, and then we can jump into the questions. You can start with you, Neel.
Hey, thanks, Mohamad. Hi, everyone. Hope everyone's doing fine. I'm Neel. I'm the CEO and co-founder of DataCultr. DataCultr is a data-driven debt collections and risk management platform for financial institutions. We make it less risky and scalable for these financial institutions to lend to new-to-credit customers. We have a unique way of using a borrower's smartphone. We all know for a majority of mid-income, low-income, unbanked population, their smartphone is a critical asset and sometimes the only asset that they own. We allow these people to present their devices as a virtual collateral to the lender, making it less risky and easier for the lender to lend to these people. We're currently in kind of early growth stage. We were planning to raise funds and we'll kind of talk about it. But yeah. Thanks.
Amazing. Thank you, Neel. Kevin, to you.
Hello, my name is Kevin. I'm working with Hubpay. Hubpay is the digital wallet for the remittance community, serving the markets both from the sending markets in the Gulf to the receiving markets across Asia. We're providing a digital wallet for both the sender and the receiver to build a cross-border wallet for remittances rather than just a send a solution. We're eliminating the kind of physical cash in and cash out solution and focusing instead on a digital financial inclusion product. We're the first licensed startup in the UAE for the money services license, only one of two companies currently with the license in what is the third largest remittance market in the world. We have currently just completed beta testing and are now going live to market for both India and Philippines corridors for both remittances and international bill payment. Hubpay is a digital wallet built around a chat function, enabling users to send money, to pay bills, but also communicate with their loved ones.
Amazing. Thank you, Kevin. Mukesh?
Hey, Mohamad. Hope you're doing well. Yeah, I'm Mukesh, co-founder and CEO at Paymatrix. We are a startup based out of Hyderabad, India. We enable individuals and small businesses to borrow for short-term cash requirements or unanticipated expenses, or whenever they have cash crunches, and enable them to pay as they have cash flows in place. So we enable them to borrow either using a credit card or through a short-term loan, which are flexible to borrow and repay without having to incur any processing charges or pre-closure charges. Currently, we have around 70,000 customers based out of India, and we are in early stage of growth.
Amazing. So more or less, you're all in the same stage at this point. Just the early stage growth, kicking up, numbers are increasing. That's good to see. So the main topic is for this panel is basically what are the challenges you faced this year? So it's been quite a challenging year. That's an understatement, I guess. But I want to hear from you guys. What's the main thing that really affected you? Like the main focus that you really were trying to overcome this year? Maybe just in a couple of words, each of you, if that's all right. You can start with you, Neel, if you want.
Sure, right. I think the pandemic essentially changed the course for a lot of us. For us, for example, we had funding plans, that got slowed down. Clients deferred projects to accommodate for the sudden change in dynamics that they suddenly kind of had to face. It was like a double blow for at least for us, right? So, sustenance was the key. And guess what, that's what startups do, right? So all of us, we went back and went back to the drawing board, looked at things and and ways in which we could kind of sustain and get past this crisis. The challenge was to keep the teams motivated and to ensure that we remain on track, and that's what we did. We kept our focus on the product and on building a great customer experience. I think we utilized this downtime well.
Yeah. Okay. Kevin, what about your side?
Yeah, I think Neel's comments probably echo a lot for a lot of us. You had really two kind of phases within the impact of COVID. The initial one was shock. This is the first time a pandemic of this nature has hit in 100 years. So the world, the markets, investors were all in a state of shock and really trying to triage and assess what's going to happen, what's going to mean for them. Similar to Neel, we were closing our seed round in March. We had commitments. We were pretty much all going to wrap up. COVID hit, and then rapidly the round collapsed. Funds pulled because they were concerned about their existing portfolio, not about our prospects, but the fact that they had no idea how this is going to manifest, what implications it was going to be for their portfolio companies, who they have to support, and where would the kind of cash flow liquidity squeeze be. So that was a shock and that was a challenge. I think once the kind of dust settled, and you kind of almost saw that with really the stock market. So they went through this torrid time of kind of 2 months of crashing, similar to how we saw back in the financial crisis of 2008, post-Lehman collapse. But then once it kind of stabilized out, they're like, well, we understand what's happening here. This is a global event. Underlying markets are still robust. There is not kind of a structural collapse within kind of markets. And it's ubiquitous across the entire world. And so then once that kind of certainty was there, investors, especially after the stimulus packages from US and Europe, would then be looking where they're going to put their money. And actually, FinTech is probably the best place to place it. There's a lot of investments such as retail, high street, property, which are going to face challenges, especially with the kind of new kind of working from home arrangements that will still be in place for another 6 to 9 months. But FinTech is going to drive the digitalization, that kind of fundamental shift is the best kind of markets to kind of capitalize on. And so I actually think it has accelerated the investment in FinTech. We ended up closing a stronger round than we actually wanted to, than we initially anticipated to, rather. In September, we increased it from 1.5 to 1.75. We were oversubscribed in the end. And going forward, I think it's going to be a pretty strong kind of first off round for fundraising next year.
Nice. So past the preliminary shock, the first shock, and actually, since you're all offering services or products that are actually essential during, I would say, since your smartphone became more important, since FinTech is basically infrastructure for the whole society at this point, and then since Mukesh, you're offering easier way to conduct payments. I mean, the initial shock passed. I mean, there's more focus, or things got easier, or things ramped up in a way, right? Can you say that?
Yes.
No.
What we have faced is an interesting situation. While on the demand side, what you have cited is very well right. People did need credit, and during the downturn, given the uncertainty pertaining to their business or their profession, people still were hungry for credit. But the challenge which we were facing is on the supply side, that is on the bank or the non-banking financial institution who was not very open to open their purse strings to lend it during such a downturn. And for the 6 months of time, what we have seen, particularly in India, is almost all the NBFCs and banks have been sitting very tight with their books, not willing to take a risk to, especially lending it to individuals on terms of unsecured loans. And that made us actually revisit the product. And just like Neel has cited, it gave us an opportunity to revisit the user flow, strengthen the product, and also to get into some new alliances, which otherwise we would have overlooked, or we would have kept something down the priority order in the normal course of business.
Yeah. So, number-wise, did your growth get affected? I mean, that's the general question for everyone. How do you see it like across the last year? How did it look like in terms of curve, or let's say growth? Was there like slump and then did things recover, or how do you analyze that?
Well, from our side, I think there was the increased kind of trend towards digitalization just means more people are going to use digital solutions. We're moving from a brick and mortar kind of solution within the kind of cross-border payment market, and that has only accelerated and a material factor. If you we looked at Google metrics earlier this year. We're on the kind of Google 6-month program, and it was a 3x increase in terms of digital searches for a cross-border payment or remittance solution from previously from January of this year. So, a fundamental shift in the market. Yeah.
Neel, was there more demand on getting loans for these smartphones? I mean, do you see this kind of behavior increasing since the beginning of the year? I mean,
so see, there's always a demand for smartphones and for small loans, right? And for us, for example, we were all set to launch with India's largest consumer financing NBFI in March. And that's when the crisis hit us. We kind of lost almost 5 months. We did go live in August, but the business is slow. It will probably take at least another 4 to 5 months, if not more, before we start seeing numbers that we were hoping to achieve in March. So we've lost pretty much a year of opportunity. And as Mukesh said, it's probably because the banks and NBFIs have kind of are holding back. They're not really opening up and giving out loans, especially when it comes to new to credit or unbanked customers. But again, there was some bright sparks for us. We went live right in the middle of COVID in Malaysia in May. And we also went live with another large NBFI in August in India. So yeah, so I think while we lost 4 or 5 months of real momentum that we would have kind of gained during this period, but for us at least, the clients are coming back. The projects are going back live with a lot of potential clients who had kind of put it on the back burner. We had hiring plans, and what we essentially did was we actually executed those, right? So we were 10 people in March. We're now 20 people, so we almost doubled. We now doubled our team. Because again, we used this period to kind of work on the product, work on the team, have the right team. When the clients go back live, we should have the right team working with the client to ensure success. So that's what we did.
Yeah. So basically, go ahead. Go ahead, please.
Yeah. So I second with Neel's thoughts. At Paymatrix, what we faced was that in March 20 was the best month which we have ever faced. Since September last year to March, we were continuously growing, and we were thinking that everything was on the best place. And March end, that was in the last 1 week of March, is that when we realized that something is coming up. And since April to June, we have seen a continuous downtrend, and we almost saw around 50 to 60% contraction in business. Our June numbers have been pretty bad, and of course, again, we started to see a small revival in business from June, owing to the removal of the lockdown restrictions, and the business started to open up. And the interesting part is that we are now back at pre-COVID numbers, and we indeed hit our all-time high in this month, exceeding our March numbers. But coming back to the last 6 months, that was really painful because it was like a roller coaster ride, not at all prepared for such a growth downturn.
So I guess the lesson that we all took during this period is basically take this downtime basically to focus on everything that on the product, on revisiting all the assumptions that you had, reshuffle priorities, and then accept that we have to ride it through, and then go ahead and be ready when things start picking up again after COVID, basically. Interesting. Okay. So I know that the three of you, I think you're at different stages of fundraising, or you were at different stages of fundraising during when the COVID hit. So how did that affect? Like, can you give us practical examples on how that affected the closing of the round? some delays in the due diligence, some investors backing up, like they don't want to invest anymore. What happened with you on that specific topic during this period?
For us, for example. Sorry, go ahead.
Yeah, go ahead.
Right.
Go ahead, Neel.
For us, for example, we kind of started planning for the fundraise around Feb and March this year. Again, looking to raise around $2 million USD. And there were initial talks that had begun, especially in UAE and with a couple of Indian VCs. They kind of went slow. Suddenly in March mid or late March, we still continued with a lot of conversations. We started, we opened up a few more conversations during April and May, but again, those guys pretty much clearly told us that it will take time, and probably we must get ourselves ready for a long haul here, and maybe look at smaller round, cut the round to or maybe look at a smaller funding, sustain the next 6 to 9 months, and maybe look for a larger round later on. So we had good conversations. We had a couple of investors going through due diligence and stuff like that. But again, they've kind of told us that, okay, wait it out, and let's connect again in Q1. So for us, for example, we've kind of moved on to looking at Q1, hopefully to restart the process for us. And hopefully, things will be better, in the next quarter.
What were the concerns for the investors, basically, like when you were having these discussions with them? I mean, I remember from our startups here, I mean, a lot of the VCs were actually willing to have the conversation. They had the time, I felt. But when it came to investing, they were a bit reluctant. So what feedback did you get from them during that period, Neel?
I think the most common one was that we are kind of saving it for some of our portfolio companies, and times are uncertain, and we don't know how the dynamics will pan out once this crisis is over. So they wanted to also go through and do a watch over what's happening, and then probably decide. So those were a couple of concerns that pretty much all of them had.
Yeah, just focus on the existing portfolio. Cool, great, thank you. Kevin, from your side, how did that process happen?
I think as mentioned earlier, and kind of in line with what Neel just said, March, April time was just sheer shock. So when investors don't know what's happening in the market, or what's to understand, how severe was the virus, how significant was an effect, markets, countries, etc. They're just going to freeze. And we saw that freeze back on. I think, and they're making a reassess kind of where they were, and that's exactly what happened to us. I do think that one of the learnings that came out of the kind of global financial crisis probably 10 years earlier was that when there is a major shock to the system, in 2008 it was financial structures of banks, and also suffering balance sheets, and now it was a kind of global pandemic. The markets now understand that governments will mobilize significant stimulus packages, and therefore that's going to create a considerable amount more liquidity in the market. Most of that money flows into asset management, which then kind of flows down into private equity and venture capital, benefiting firms like us. Our lead investor was Signal Peak Ventures from Salt Lake City in the United States, and the reason they stayed with us all the way through, they'd signed on in March, the rest of the investors bailed at that time. They stayed with us, which gave us a lifeline, and then we could have rebuilt around with them kind of leading. And their line at the time was, look, we've seen this play out before. In 2008, you had a major global shock. Trillions wiped off balance sheets, both on a kind of corporate and sovereign basis. But then what happened in 2009 is it created a gap in the market. And if you look at the 2009 to 2013 period, that is when most of the fintechs that went on to become unicorns in the UK and Europe was launched. Because there was opportunity, because there was a change, because there was disruption. And the same in this case is now we've seen major shift, as I mentioned before, about increased trend in digitalization, certainly shifted by the pandemic. And then also for disruption, people, it changes the status quo. So I think that's the case. I think going forward, it's going to be particularly fertile fundraising ground for fintechs. In fact, I don't think this has disrupted the fintech opportunity from a fundraising growth point of view. I think it's only galvanized it.
Yeah. But interesting is that you went from having a secured round, then most of the investors dropping out, and then you shifted that round and went into an oversubscribed round. So yeah, the oversubscription part, what happened in that? What happened what caused the investors to turn around and then get more interested? I mean, there's something you done from your side, it's market dynamics, or?
Yeah, I think there's a great number of factors at play. I think the fact we were going to do probably well in the fundraising anyhow. We'd obtained the license, we had a strong team, total addressable market in the UAE and the Gulf is just enormous. It's a green pasture here. So I think we were doing that anyhow. In Q1, we had a very strong kind of reception. So I think the market was that there, regardless of once you get over the shock factor. I think we secured some very strong angels out of London and New York, who'd been at the kind of senior rungs from kind of Goldman Sachs and Morgan Stanley on the technology side. And they would speak, in addition to Signal Peak Ventures, to other investors who were looking at it. And that's a kind of strong validation. I think what you're seeing a trend in fintech, a broader trend, and I think some of our angels here were able to capture this. When I'm speaking to other kind of, I've got the friends in fintech's raising right now. What's unique about the kind of fintech opportunity from a fundraising point of view is it can access capital other tech sectors cannot. And what I mean by that is if you wind the clocks back 15 years and you went to Davos or something, the kind of titans of industry were investment banks. And then by 2008, 2009, after the global financial crisis, that totally changed. And who became the titans of industry globally? The tech companies, the Facebooks, the bankers have been sitting there with still vast sums of money, wondering about what's the next growth opportunity. And it's now fintech, because they may not understand social media or TikTok, but they understand microloans and microinsurance very well. And they have access to a large kind of pool of capital. So I think what you're going to see, and I know Neel's business very well, DataCultr, for example, if I may speak on his behalf, is they're addressing a market that was previously underserved. What do banks in the financial industry want to do? They want to access new opportunities. They've got a significant amount of experience and liquidity, and they want to deploy that in other areas. So I think it's the fintech, especially the emerging market fintech space right now, that's going to attract capital that other sectors and other companies just will not.
Yeah. That's specific for the fintech vertical then. And we're not going to see similar behavior maybe for industries. Yeah. Cool. Great. Mukesh, I know you were also in the process of fundraising and then stuff got delayed. And how was your experience? I mean, what happened during that period also on that front?
Yeah, our experience with the fundraise during the last 6 months has been that investors were still open to have conversations, but were not decisive about the further actions. So they wouldn't tell you straight away that they are not, they are sitting tight or they would not looking for opportunities, but rather they would want to have an ongoing conversation without coming to any decisive action. And some of the conversations which we have been having, which have been initiated well before the pandemic has started, they have got delayed. I mean, say the process hasn't been yet called off, but the investor would want to just play it safe by taking time to come to a closure, or by the time he gets some visibility in the market or visibility in the traction, market traction assets. So I would say the inflection point would be somewhere around September, wherein the investors, of course, turn back to the stage where they are now more open to discuss or to take that next decisive steps. And now I would say that we are at a point where investors are having a normal course of discussion, which they used to have just before March.
Yeah. Cool, great. I think we have 5 minutes left on the clock, so maybe we can wrap up. Just what's your outlook? I mean, how did this affect your outlook for 2021? And how do you protect your business now going forward? I mean, having went through this shock or this transformation this last year, how did it change the way thinking forward, what do you advise for the other startups that are watching us now? What can they do, especially when they're starting off early stage? Maybe we just have like a minute for each, and then tell us what you think, and then I think we can wrap up.
So I'm very hopeful. What COVID essentially did for a lot of financial institutions was to bring focus on debt collections, right? As Kevin rightly said, what DataCultr is trying to do is to serve and open up a completely new market, which was not served at all, right? It's a $200 billion annual opportunity for banks in emerging markets, and COVID essentially brought a required focus on the debt collection side. We're now getting a lot of inbound leads with financial institutions seriously looking at technology to solve for challenges in their debt collection processes. The business, of course, should be back, hopefully improving our key metrics, which should make it less tough to raise the next round. But yeah, a quick one for anyone who's starting up or looking at things and how to kind of do things if a crisis hits them. I think sustenance is the key, and what helps you sustain is to have a solid product and vision. The opportunity, of course, has to be there, and with some real clients already in the kitty or seriously looking at you, of course, gives you that kind of confidence. That helped us, at least, because we had some two really large clients backing us while they were not going ahead with the project, but they were still saying hold on and we'll go live. That helped us, at least. But yeah, it's about how do you keep yourselves first motivated and then the team, and if you get a ways in which you can do it, nothing like that.
So focus on product, keeping the team motivated, and then looking for sustainability, healthy unit economics. Definitely.
Absolutely.
Cool. Mukesh, Kevin, I'll wrap up with you then. Yeah, go ahead, Mukesh.
What we see is that this pandemic did through some opportunities. It's for us to just find them. To give you an example, at Paymatrix, the users who were initially reluctant to adopt a digital channel for their previously the payments which they otherwise used to transact using a bank transfer or through a cash, now they have realized the importance of even taking a short-term credit for such expenses to keep money liquid for any uncertainty. So what we have seen is that we have seen more number of users trying out the platform, and this we believe is a dramatic shift for us, wherein we would otherwise have to spend a lot of money on customer acquisition and to just convince them to validate our proposition as such. So on that way front, just like us, there are many fintechs whose business models have been validated or tested during the pandemic, wherein the need has been realized well now.
Yeah, amazing. So if you want to main keywords basically that came out of this, I would say faster adoption, because you're positioned in a way that basically serve the need during these times. Yeah. Oh, amazing. Great. Kevin, we end with you.
Yeah, absolutely. Thanks, Mohamad. Yeah, I think echoing Pavel's comments, the major trend is faster adoption, a more dynamic environment, both in terms of, as Neel highlighted, increased number of ecosystem players looking at partnerships and kind of solutions in the area, and then greater liquidity from a fundraising point of view. I think 2021 out of this, there will be almost kind of a post kind of war spirit where people are looking to build things and looking to recover. I think 2021 will generally be a very dynamic time for markets generally, but FinTech I think will be in a unique position to benefit from that.
Amazing, great. Well, we're running out of time, so I want to wish you best of luck. I mean, in the coming times, it was a tough year, but I'm guessing the outlook for 2021 is really positive. I want to thank you for the valuable insights that you gave us, and yeah, have a great day, everyone, and thank you very much.
Thank you.